Good morning, Bob.
Good morning, Bill.
It's the Monday morning after Easter, and we are discussing really what is going to be our last show for a while. We're going to put things on hiatus and take a little break.
Kind of like the Easter Bunny visit.
Kind of like that.
Well, some nice candy and eggs.
Like the song said, hopping down the bunny trail. Basically, that's what the Fed has been doing. They've been hopping down the bunny trail.
Well, they're hopping back and forth.
Like a rabbit, they can't decide which direction they're going in.
Well, you know, Professor Yellen was all about being cautious. And then she started talking about, yeah, it's going to happen this year. It's going to happen, you know, we're going to raise the rates. But we're going to do it slowly.
And then Friday's job report came along.
Job report came in, and you know, it's only about half of what you need to sustain the growth.
126,000, the worst we've had since December of 2013.
But on the other hand, there's
the economist view now. The other hand,
well, you know, there's always two or three hands.
I mean, 126,000 is abysmal. Is that because of the weather?
It's because of the weather. It could be because of the balance of trade. You know, we have the smallest deficit in our balance of trade since October of 2009.
The dollar is soaring.
Dollar is real high, so jobs are going elsewhere, you know, because people are buying the cheap stuff. All those foreign goods are now lots cheaper.
Well, so let's talk about, well, let's back up. Housing seems to be, if you just look at the permits, it seems to be on the mend.
Yes, it does. And, you know, foreclosure, incidence of new foreclosures, excuse me, is going down. But you got to remember that our foreclosure rate today is still almost twice as high as it was before the crash.
Well, so that means some people have been hanging on.
Uh-huh.
And so let's talk about the whole economy. At the end of the day, if you look at the Fed, did they go up this year? Because you're on record as saying,
I know.
that yes, they're going up, and that no, they're not. And now, where are you?
Well, the good thing about being an economist with two hands is I'm on record as saying it's going to go up, and I'm on record as saying it's not going to go up.
That's right. So, wow.
So, yeah, I think that Janet Yellen is going to do everything she can to raise it before the end of the year. However, the economy is still not strong.
There's no inflation. There's no inflation. In fact, there is evidence to indicate, just based on what we're seeing, that they're going to have a bigger issue. The risks of deflation are starting to reappear more so than expanded inflation, toward the 2% area.
There's been several interesting articles recently. First of all, oil keeps staying down. It's half of what it was a year ago.
And some of the analysts are calling for it to half again.
Construction lumber, of all things, is way down. You know, so the cost of new construction is down. There was a real interesting, the Atlanta Fed put out their annual report a week or so ago, and they talked a lot about the fact that we're not seeing productivity go up. All of the production gains have been because we've been hiring more employees. But normally, at this stage, you would see productivity per employee going up.
Well, per hour worked is actually flat or slightly down.
Right, and the.
I'm sorry, per hour. I mean per week, hours per week.
Yeah, and so we've got some issues right now. They think that the reason is that there's been no capital investment. I mean, it's been really low throughout this whole recession. And it's going to take people starting to build up their capital again before we see those productivity gains.
Right, and let's step back and talk about that. We've been living on borrowed money and borrowed time because we've let the Fed basically take care of us. We've had low rates. The market, these companies have allowed the Fed to take care of them. They've had low rates, and so they've been buying their stock back. They've been doing refinancings. And all of that expense has been flowing through to the shareholders. It's been passing through the bottom line.
Right. And so that may be good for cleaning up your books, but it's not good for growth.
No, it's not.
You know, and that's where we're hurting right now.
And so the way they've grown is they've done acquisitions.
Right.
And instead of actually going out, for our listeners out there, growth occurs in one of two forms. It's either organic, you either grow by internal means, you have something new to do, and you have a new product, that sort of thing, sort of like our TRID tracker. or our, well, that's a big deal. You know, TRID tracker's a big deal.
Yeah.
And so GAR 360 is a big deal. Those are two new initiatives, and we had to invest money to bring those to market. And so and ultimately we had to hire some people and do some things. And so that's an example of organic growth. That has got higher returns to it probably because it's riskier. I mean, if the finance people are correct, there's no free lunch. You've got to take more risk to get more return. All right? We don't have the other hand. It's just a simple thing, risk and return. Okay.
Well, you know, there's upsides.
I know, exactly. All right, and so the other type of growth is acquisitive growth. You go out and buy somebody, and that's what we've seen going on.
Yeah.
That appears to be on the surface anyway less risky.
Well, it's less risky because you've got a known quantity that you're acquiring, and you know, and the truth is, you've got very cheap money.
You do,
right? And you've got a surplus of money sitting out there looking for some place to invest. And so they've been doing that. And why haven't they invested in capital? Because there's no demand.
Right.
You
I
know,
mean, why would you go out and build something new if there was no demand?
Exactly.
I mean, you can do things incrementally, but why would you go out there and invest a lot of money if there was no demand? Or unless you thought there was a reasonable expectation in the near future of demand coming back.
Right.
And we haven't seen that.
No, and in fact, GDP is projected for the first, for the first quarter to be flat or even down.
Now there's an emerging school of thought that Janet Yellen is going to do a token rate increase this year.
Uh-huh.
And we're going to be on hold a while, and if that doesn't work out, if that like slows things down, she may back off.
Yeah. Well, that makes sense because she's under a lot of political pressure to raise the rates for no rational reason, but there is political pressure to do that, and so she may just bow to that political pressure and make just a token.
If she waits till next year, then she's got all the political influences of the election coming into play.
Right.
And so the question is, basically, if she goes up this year, just a little, she can always come back down next year, but right before the election, that'd make everybody happy.
Well, you know, there's quite a few articles being written right now about the fact that if you had to pick one thing to control an election, a presidential election, it would be the state of the growth of the economy immediately prior to the election.
Well, so everybody wants it to grow.
Well, no.
But the opposition does it. The opposition is it, but the people. Well, there's not going to be any opposition today because there's going to be. We're not going to have an incumbent president running.
No, that's true. But the office, the party that has the office of the president, does much better
if we have growth.
If we have growth leading up to the election.
And if we don't have growth, the opposition, the party that does not have power in the office of the president, does better.
That's exactly correct.
And so, but that's why we separated the nomination, appointment, and confirmation of the chair of the Board of Governors of the Federal Reserve off these election cycles. Although there's still a lot of politics involved.
There is.
Because the chair of the Federal Reserve Board of Governors is a very powerful position. In fact, many people think that's the most powerful position on the planet because they control our wealth.
Yeah.
And investment
the way we were
lots
just
of
talking
things.
about potentially control the election.
Exactly. I mean, so yes or no, are we up this year?
I'm still saying no.
You know, for the first time in a long time, we agree. I say no as well. All right, and so not this year, but January.
Now, well, maybe
16.
maybe we'll bring Morning View back a year from now to see how things are going.
Exactly. Well, we're signing off. This is FNC's Morning View. I'm Bill Rayburn with Bob Dorsey. We're going to revamp Morning View, and we'll be back on the air after a while. You all have a fantastic spring, and let's hope summer gets here quickly, and we can all go to the beach.
There we go.
You all have a fantastic time. Bye-bye, Bob.